Well, hello everyone, and a warm welcome to the webinar today entitled Understanding the NHS Pension Scheme. And today I'm looking forward to being able to provide you an overview on the key benefits of your NHS pension, how it works, and talk around the various ways you can save additional money for your retirement. So my name's Nick Pottinger, and I'm one of the retirement education specialists here at AVC Wise, and I've worked in financial services for over 20 years now, and for the last 9 of those years I've been working exclusively in the public service AVC sector, where I've helped thousands of people like yourselves understand the key benefits of their pension scheme and help them save additional money for their retirement and bring their retirement dreams to fruition. A few bits and pieces to cover before we get underway then. So the content of this webinar is provided for educational purposes only and does not constitute financial advice. And the information given is based on our current understanding of taxation, legislation and regulations. Any levels and basis of and reliefs from taxation are subject to change, and tax treatment is based on individual circumstances and may be subject to change in the future. And finally, fund values can fall as well as rise, and past performance should not be used as a guide to future performance. So in terms of what we're covering today, firstly, I'll give you an overview of the NHS Pension Scheme and the benefits associated with just simply being a member. I'll then take you through how your pension benefits are calculated. We'll talk a bit around the age it is that you are allowed to retire, and I'll also be taking you through the different various ways you can increase your retirement benefits within the NHS. And then finally, I'll show you how to gain further information about your NHS Pension Scheme. Okay, so to start off with then, let's just talk about some of the key benefits you have being a member of the NHS Pension Scheme. So the NHS Pension Scheme is without a doubt one of the best pension schemes in the UK, and it does have some very significant benefits for you. So let's go through them one by one, just to give you an understanding of how good the scheme is. So firstly then, it gives you security. Your NHS pension scheme is known as what is called a defined benefit pension scheme, and therefore you're secure in the knowledge that based on your years of service and the salary amounts you've been on over your working life, you're going to get a guaranteed income paid every month for the rest of your life in retirement. And importantly, your pension is index linked to increase with inflation each year. And this is really one of the best features of your NHS pension, especially at the moment with inflation running at its highest level in years. So the pension benefits you're currently building up are revalued each year and increased by CPI, the Consumer Price Index, plus a further 1.5% on top. So that not only keeps your benefits in line with inflation, but enhances it on top of that too. And once you're in retirement and you've taken your NHS pension, your pension income will continue to increase year on year in line with that Consumer Price Index. Now, you pay a percentage of your salary into the NHS Pension Scheme directly from your payslip, and any contributions you pay into the NHS Pension Scheme are eligible for tax relief as long as the money you're paying in was due to be taxed by your employer. So you do get that automatic tax relief at source, which means it's a very tax efficient way of saving money, and you don't generally need to worry about claiming tax relief back or completing any self-assessment forms. You've also got your employer contributions too. So remember, it's not just you contributing into your NHS pension because your employer is also paying into it as well. And currently your employer is funding your pension by a further 14.38% of your pensionable salary. And that's also then topped up further by the NHS pension scheme, which results in a total employer contribution of around 20.6%. So your employer is generally paying around twice to 3 times the amount you're personally contributing yourself. And if you're unfortunate enough not to make it to your retirement, you do have a death in service tax-free lump sum, which is 2 times your annual salary. That's paid on death, and it goes to your nominated beneficiaries, subject to pension fund approval. You've also got the possibility of taking flexible retirement, sometimes referred to as partial retirement or drawdown, and that's where you can draw down some of your pension benefits, or all of your pension benefits, and be in receipt of that, then go back to work, typically on reduced hours, and carry on being a contributing member of the NHS pension scheme. And another benefit you've got is ill health protection, and that can be paid from any age if you can't work due to ill health without reductions. However, to qualify for that benefit, you will require at least 2 years service in the NHS pension scheme, and it is also subject to medical certification as well. Also, if you were to die whilst in retirement, your pension does not die with you, as there is a survivor's pension where, depending on your scheme membership, up to 50% of your annual pension would be payable to your spouse, civil or cohabiting partner, or eligible child in certain conditions. And lastly, if you were lucky enough to have been in the NHS pension scheme before April 2008, you'd have also built up an automatic tax-free cash lump sum for when you retire, in addition to your annual pension income. And we'll go into a bit more detail on that shortly. Now, some of you here today might be aware that the NHS pension scheme has changed a number of times over the years, and there are actually 3 different NHS pension sections. So firstly, you've got the 1995 section that ran up until the 31st of March 2008. You've then got the 2008 section that was in place between the 1st of April 2008 to the 31st of March 2015. And then finally, you've got the 2015 section, which has been in place since the 1st of April 2015. Now, it's important to note that you can see on the screen there the different dates the sections started and finished. But just bear in mind, you wouldn't have necessarily moved across to a different section on those dates, as there are transitional timeframes to take account of, where you may have had full or partial protection, and due to that, you could have been moved into a section after the date it started, or in some cases not moved into a section at all. And it all depends on when you join the NHS pension scheme and the amount of years you had to go before retirement when each section came into place. And the easiest way to determine what service you hold in each respective section of the NHS pension scheme is to take a look at your NHS pension statement or log into your online NHS pension account, where it will detail what service you've built up in the different sections of the scheme. Okay, so let's for a moment then just take a look at how these 3 NHS pension sections differ when it comes to working out what you'll be entitled to as an annual pension in retirement. So it doesn't matter when you join the NHS pension scheme, you'll all now be a part of the 2015 Career Average Revalued Earnings section, also known or abbreviated to the CARE section. And this section's been in place since the 1st of April 2015. And the latest any of you would have moved into this section was on the 1st of April 2022. So for every year you're a member of this 2015 section, you bank 1/54th of whatever your annual pensionable salary has been within that year. So, for example, if your annual pensionable salary was £54,000, you'd have banked £1,000 of pension income that would be payable to you for the rest of your life in retirement. So as the years go by, then you would build up so many 54ths of your annual pensionable salary within this section. And as I mentioned earlier, it is revalued by CPI plus 1.5% each year to protect the value of your benefits. And then when you retire and take your benefits, all the 54ths you've banked are added together to form your annual pension amount in retirement. Now, a lot of you watching this today will have service in the 2008 section, and this is what's known as a final salary scheme, where your annual pension amount is based on your final salary at retirement. So the way your final salary is calculated in this section is they will look at your reckonable pay, which is the average of the best 3 consecutive years of pensionable pay received within the last 10 years before your retirement. And that's the figure the NHS pension scheme would be using as your final salary in this section. And then to work out the pension benefits you're entitled to, they would take that reckonable pay amount, divide it by a factor of 60, and then multiply it by the number of years of membership you hold in this 2008 section. And that would then give you your annual pension amount in retirement. And a number of you would have built up service in the 1995 NHS pension section, and this works on a very similar basis to the 2008 section in that it's also a final salary scheme. And the way the NHS pension scheme calculate your final salary in this section is they take a look at your last 3 years pensionable pay before retirement and take the best year from the last 3 years as your final salary. And this section is then calculated by taking that final salary amount, dividing it by a factor of 80, and then multiplying it by the number of years of membership you hold in this 1995 section. So with this 1995 section, then you won't getting quite as good a deal in comparison to the 2008 section when it comes to the annual pension amount, as 1/80th is a smaller slice of the pie when compared to 1/60th. However, with this 1995 section, you'd have also built up an automatic entitlement to a tax-free cash lump sum, which is 3 times the annual pension amount you're due from this 1995 section. And that will, of course, be in addition to the annual pension you'll be getting in retirement. So that's how the 3 different sections of the NHS pension scheme are calculated. And of course, some of you watching today wouldn't have any service in that 1995 section. And therefore, your automatic entitlement to a tax-free cash lump sum would be 0, as all the sections that have since followed that 95 section have all been solely focused on building up an annual pension amount in retirement. But that doesn't necessarily mean that you can't take a tax-free cash lump sum when you come to retire. So whatever pension scheme you belong to now in the UK, you are allowed to take up to 25% of the benefits out as a tax-free lump sum. So when you get to retirement, you've got the option that you could decide to exchange some of your yearly annual pension income in retirement to take more tax-free cash. which sounds like a good idea, doesn't it? Everyone likes the idea of getting money on a tax-free basis. But what happens to your NHS pension income if you did decide to take additional tax-free cash? Well, let's have a look here. So you have your annual NHS pension amount in retirement, whatever the amount is in your case, and you can decide to commutate £1 of your annual pension income in exchange for £12 of tax-free cash, which on the face of it there doesn't sound like too bad of a deal. But in reality, that's a whole £1,000 of guaranteed pension income per year that you'd be losing for every £12,000 of tax-free cash that you take. So you'd actually need to think long and hard about this, because if you think about the average life expectancy and how long we all might expect to be around in our retirement, it might not work out to be such a good deal. And then you also have to consider that that £1 of pension income, that annual pension income that you're giving up, is not only guaranteed monthly income paid year in, year out until you die, but crucially, it's got that index linking attached to it. So the income you're giving up and that £1 isn't going to stay as £1. It's going to be going up and up by whatever the CPI is, the Consumer Price Index is. So if you leave that £1 of annual pension income alone, in all likelihood, you're going to be very glad that you made that decision, as you'll now have that income that does have the benefit of having index linking attached to it, rather than the quick win of getting £12 up front of tax-free cash. The only way you can really see commutation to tax-free cash as a good deal is if, unfortunately, you're not going to be around that long in your retirement. Okay, so moving on then. So one of the most frequently asked questions about retirement is, when is it I can retire? So your NHS pension scheme has 3 different sections, as we've covered today, and the 3 different sections each have their own different normal pension age. So for the 1995 section, the normal pension age is age 60, although there could be an exception to that if you hold special class or mental health officer status, where you may be able to retire at age 55 and take your 1995 benefits at age 55 without a reduction. For the 2008 section, the normal pension age is age 65. And then finally, for the 2015 section, your normal pension age will be the higher of age 65 or your state pension age. And currently, the latest state pension age you could possibly have is age 68. But of course, the government can change the state pension age at any time. So as the years have gone by, then you can see that each new iteration of the NHS pension scheme, that normal pension age has been creeping up higher and higher. So your normal pension age then is the age that you're allowed to access your NHS pension benefits without having known what's called an actuarial reduction applied. But you are able to access your NHS pension benefits as long as you're over the minimum retirement age, which is currently age 55. And for some of you, you may be able to access your 1995 section benefits at age 50 if you had membership in that 1995 section prior to the 6th of April 2006. But for the vast majority of people, it's going to be age 55 as the minimum that you're able to access your pension benefits. Now, do bear in mind that if you choose to access your NHS pension benefits before your normal pension age, reductions will typically apply, and this will mean that your annual pension amount will be reduced. And this is due to 2 reasons. The first reason is that you'll have less years of service in the NHS pension scheme. And secondly, because the NHS pension scheme will typically apply an actuarial reduction to your annual pension amount, as the pension scheme knows that they will now need to pay out that annual pension income for a longer period of time than initially expected. Now, there can be some instances where the actuarial reduction may not apply. So if you're made redundant after the age of 55 and access your pension benefits, the pension fund would not apply an actuarial reduction if you choose to use all or some of your redundancy payment to offset the actuarial reduction. Or if you're an NHS employee that holds special class or mental health officer status, you may be able to access those 1995 section benefits at age 55 without an actuarial reduction. But for the vast majority of the time, if you access your pension benefits before your normal pension age, the actuarial reduction will apply. And just to give you an illustration or an example here of the potential impact of retiring early. So here we have someone whose normal pension age is age 67, and if they retired at that age, they would be entitled to an annual pension amount of £15,555 or so. But in this case, they would actually looking to retire 3 years early and retire at age 64 instead. Now, you might think just going 3 years early wouldn't have too much of an impact on the annual pension. I mean, that's actually in reality only 36 paydays early. Well, in actual fact, by retiring just 3 years early and accessing the NHS pension at age 64, in this particular example, it wipes off £3,750 of the annual pension income. And that's a pretty substantial hit to take. And that reduction is down to that double whammy effect of reducing the years of membership in the scheme and the actuarial reduction applied by the NHS Pension Scheme. And remember, it's not just 1 year that you would have to deal with that reduction, as that pension income would be reduced for the rest of your retirement life. And if you're intending on having a long and fruitful retirement, you could be living for another 20, 25 years perhaps. And that's a lot of money per year that you'd be missing out on. Now, there might be some very good reasons as to why you may want to be retiring early, but you would probably want to give careful consideration to the age it is that you do want to retire due to those significant reductions that you see to your annual pension amount when you do retire earlier than your normal pension age. Okay, so before we go further today, then let's just take a step back and take a look at the bigger picture when it comes to our retirement. And let's just ask ourselves, what is my pension for? Now, there sometimes is a tendency not to want to think about our retirement plans, with the mindset that if it's not something affecting us in the here and now, why worry about it now? But remember, the savings you make throughout your working life are going to need to provide you with the income to fund that lifestyle that you desire in retirement. So throughout our working lives, then, we provide for our retirements, our future selves, by paying a percentage of our salaries directly from the NHS Pension Scheme. And at the point of retirement, we'll then move away from living off our salary earnings to living off our pension incomes instead. But for the majority of us, that pension income we'll be receiving in retirement will be far less than the monthly salary earnings we've been used to receiving. And no matter how good the NHS Pension Scheme is, you will usually have a significant income gap when comparing your retirement income to the earnings you're currently getting from your salary. So when was the last time then that you actually sat down and had a look at the projected benefits you'll be receiving in retirement? We all maybe think when I get to retirement, it's time to treat myself to a well-earned holiday of a lifetime, or spoil the grandkids, or perhaps indulging in your favourite hobby. But have a think about whether the pension income you're going to be receiving in retirement will allow you to do those things that you enjoy doing. And remember, being in retirement, you'll have more free time than ever before to pursue those activities too. So if you're someone watching this today that identifies a need to save more for your retirement due to perhaps wanting to retire earlier, or just allowing you to retire with more money to give yourself a better quality of life in retirement, what are your options within the NHS Pension Scheme that allow you to save more money into your pension? So there are a few options you've got within the NHS Pension Scheme that allow you to save more money for your retirement. And with all these options I'm about to cover here, you will get tax relief as the money goes into the arrangements, as long as the money that you're paying in was due to be taxed by your employer. So the first one is called Early Retirement Reduction Buyout, or ERRBO for short. And that's where you can reduce your normal pension age within the 2015 section of the pension scheme. So your normal pension age in the 2015 section might be age 68, for example. And what you could do is contribute into this ERRBO arrangement to reduce your normal pension age to age 67, 66, or at the very most down to age 65. And what that would mean is when you come to retire at the earlier retirement age, you will not have an actuarial reduction placed on your 2015 section pension benefits. Second option you've got is additional pension, and this works on the basis that you're buying extra guaranteed annual pension income for yourself in retirement. So you tell the NHS Pension Scheme up front how much extra yearly pension income you'd like to buy, with the maximum being £6,500 of extra pension income per year in retirement. And based on your age, your sex, and the period the contract is due to run, you'll be then given a price as to how much that additional pension will cost you. And it is worth mentioning that additional pension can be pretty expensive for what it offers. And typically, you would need to live for around 15 years in retirement before you even break even and get the money back that you've paid into the arrangement. So additional pension tends to be quite expensive, so the uptake tends to be pretty low, but it does serve a purpose for those that are completely risk adverse and want that guaranteed extra pension income in retirement. And then the third and final option you've got to increase your retirement benefits within the NHS is an arrangement called the Money Purchase AVC. And this arrangement is where you're saving into another pot of money in addition to your main NHS pension scheme. So if we take a bit more of a detailed look at how this Money Purchase AVC arrangement works. So you pay into the Money Purchase AVC directly from your salary, and you choose the amount that you want to contribute. And that money then goes into your AVC pot, which is an extra pot of money that sits alongside your main NHS pension. And you've got the flexibility to vary your AVC contributions, so you can increase or decrease your contributions as you choose to suit your affordability level. Now, the money you put into the AVC is then invested, and your NHS pension scheme allow you to choose who you have as your AVC provider, and your choice is between Prudential and Standard Life. And the reason your money is invested in an AVC is to grow your pot further on top of the contributions that you've already made yourself. And the good thing for you is you've got total control over how Prudential or Standard Life invest your money. You can take as much or as little risk as you want, and you can also change your fund choices at any time. So you're always in total control of where you're investing your money within the AVC. And then when it comes to taking your AVC benefits, you've got total flexibility to choose how you take your AVC benefits that you've built up. You could choose to take it all back as a cash lump sum, or you could access it gradually for retirement income, amongst other options. And because the AVC is a separate pot of money to your NHS pension, you can access the AVC independently of when you want to access your main NHS pension, which is an added benefit compared to the ERRBO and additional pension arrangements, where you'd only see the benefits of those arrangements when you come to retire and access your main NHS pension. But it is also worth pointing out the earliest you can access this AVC is still the minimum retirement age, which is currently age 55. Now, it is worth mentioning that with the standard NHS money purchase AVC, that's the arrangement available to you all currently. As the money goes into the arrangement, you get tax relief on it, as long as the money you're paying into the AVC was due to be taxed by your employer. And if you're a basic rate taxpayer paying income tax at 20%, this would result in you benefiting from an effective 25% uplift to your contribution as the amount goes into the arrangement. So what we offer here at AVC Wise is a new way to let employers help their employees save even more money for their retirements via the money purchase AVC. And this is done via salary sacrifice arrangement. And this means not only would you be making income tax savings, but you'd also be getting national insurance savings too. And not only that, when the money is paid into the AVC on a salary sacrifice basis, you'd also benefit from your employer contribution being added to your pot as well. And what this ultimately means is that you'd benefit from an incredible 90% uplift to your contribution as the money goes into the arrangement, which makes the money purchase AVC working on a salary sacrifice basis one of the most effective ways of saving additional money for your retirement. So what I would say is keep your eyes peeled, because your employer, by working in conjunction with us here at AVC Wise, may well soon offer the money purchase AVC on this salary sacrifice basis. And if they do, you'll then have an opportunity to save into the money purchase AVC on a salary sacrifice basis and benefit from that incredible uplift of 90% on your contributions. Okay, so in summary today then, your NHS pension scheme is made up of 3 different sections: the 95 section, the 2008 section, and the 2015 section. The benefits you're due to receive in retirement are based on how much membership you hold in each respective section, as they're all calculated slightly differently. And as I mentioned earlier, the easiest way to determine what membership you hold and what your projected benefits are estimated to be is to have a look at your pension statement, which should break down all of that information. And remember, the benefits you're due to receive in retirement will typically be reduced if you retire earlier than your normal pension age. So typically age 60 for the 95 section, age 65 for the 2008 section, and the higher of age 65 or your state pension age for the 2015 section. And if you're someone who's identified a need to save more money for your retirement, you do have those 3 options to save more within the NHS: early retirement reduction buyout, additional pension, and money purchase AVCs. So further resources then, your first port of call will be to try and have a look at your most recent pension statement, where it will outline the benefits you've already built up within the NHS pension scheme, along with a projection as to what your estimated benefits will be at retirement. You've also got the NHS Member Hub, which you can log into. You can log into your account there to see your pension benefits and also obtain a wealth of further information on the NHS pension scheme. And lastly today then, ways to get in contact with us here at AVC Wise. So you can go to our website, avcwise.co.uk/NHS. You can email us at support@avcwise.co.uk, or you can give us a call on 01252 959 779. And if you're on social media and would like to keep up to date with the latest goings on here at AVC Wise, you can give us a follow on Twitter and Facebook at the respective addresses at the bottom of the screen there. Okay, so I hope you found today's webinar informative then, and I hope you now have a better understanding of how your main NHS pension scheme works. It's a fantastic scheme that you're a member of, but I would urge you to have a bit of a think about your retirement plans and consider when it is that you do want to retire and what level of income you would ideally like to have in retirement. because the action that you can take today, perhaps by putting some additional money aside each month to go into your pension, will potentially allow you to have the life that you dream about in retirement. So thanks for taking the time to watch today, and I wish you all the success in planning your future retirement.